Hi, this is Zach here with the Bulletin Board Heroes here at Zach's Traders Cafe for Tuesday, the 10th of June. Starting off with the FTSE 100, and we're now comfortably above that weird 100-point range that we had there for quite, well, a couple of weeks at least, and taking off quite nicely. The £6 billion worth of bid fever that we had yesterday, obviously doing the trick, and people presumably working out who's next. Top of the channel here towards 90.20. We're looking for that by the end of next month, although the way things are going, might even be able to get there by the end of this month. On the downside, worst case would be a retest, or the need for a retest of 8700, or perhaps the initial May resistance, 8650. RSI just below the overbought 70 level, but given how far we've rebounded, quite remarkably cool in terms of that indicator. Moving along to the DAX, and here, not quite so chirpy. We've got this market still above the old, the 24,000 level. That was basically the initial May resistance for this market. Still looking for 24,700, the top of that rising trend channel from the spring of last year, and we will continue to look for it while we remain above March resistance at 23,500. Bit of bearish divergence coming in there, so higher highs for June, but lower RSI trace, so that does warn that we might have to retest the 23,500 level. Moving on to the Dow, and this has been the problem child in the recent past, and continues to be the problem child. Every time there's a attempt at a breakout, as we had last month, the next day we come back down again, but at least we're above the 200-day moving average, and now we certainly know that we need a proper clearance of 42,800, the neckline resistance on that post-March inverted head and shoulders, to give us a move towards 44,000 by the end of this month. Moving along to the market at the moment, which by some distance is Bitcoin. Here we're having another go at clearing the 110,000 level. We were looking for 120, well, up to 124,000, the top of that channel there from March last year. By the end of next month, we can dare to dream that that might even happen by the end of this month, if over the next, I suppose this week, we can get and stay above the 110,000 level, or even last month's 112,000 record. RSI at 60, which is in a very good place for making progress to the upside. Worst case at the moment, probably the 50-day line there at 102 would be the nightmare for the bulls. Moving on to gold, and here it's been a bit tricky of late with the market still struggling to maintain its trajectory within that rising trend channel from March. I suppose that has always been a bit on the steep side, but still just about intact, and looking for this market really to stay above the uptrend line there around the 32.90 level, at least while we're above that. Looking for as high as 3,800 by the end of next month. More importantly, perhaps, is the position of the 50-day line, which is probably going to turn out to be the floor of the rising trend channel from March. And at the moment, the easiest thing is just waiting for an end-of-day close through 3,400 recent resistance to then target the top of the channel towards the 3,800 zone by the end of July. Moving on to the stocks, and starting off with Coinsilium, which has managed to get two fundraisers under its belt and soar above the both levels. Current situation is that we've hit our third or fourth target we had there towards 9 pence. We're rather simply looking for a retest of the resistance of last month at 10 pence, so hopefully that will happen over the next week or so. Big picture target maybe by the end of next month, which is not really very big picture, would be resistance back in 2021 at around 12.25 pence, hopefully by the end of July. In terms of the downside, hoping that we'll stay above recent broken neckline resistance at 7 pence, ahead of a move to 12 pence plus. On to Distil, which has made rather more appearances here than maybe one would have expected. Current situation is that we're heading towards the top of that broadening triangle base, which we've been looking for quite some time, 0.22 the level there. Hopefully that'll happen this month while we're above the floor of the latest gap there at 0.14. Nice saucer-shaped turnaround there as well, although it's a 3 steps up, 2 steps back kind of progression. Moving on to Empire Metals, where even though everyone and their mother's claiming credit for the rise in the shares, including presumably the company and its titanium dioxide as well. The charting thing has worked, and here, in fact, yesterday we were looking for the low 20s, and we've just missed the resistance line projection there at 22.8 pence by a narrow margin. That line was the latest target line there from back in April 2022, and we are looking for that over coming days while we're above today's support and yesterday's resistance at about 18 pence, above 18 basically, looking for that high or that peak towards 23 pence. Moving along to first class metals, where there seems to be a lot of interest in terms of the recovery here. Impressive that we bounced off the 200-day line. Still looking for that 200-day line to start turning up so we could be into the run up to a golden cross. But 4 pence the target here while we're above the 200-day line at 1.9 pence. Nice to see that the RSI's remained above neutral 50, even on that rug pull from 3.5 pence to 1.8 pence. On to Filtronic, which, if the Americans have any sense, will be the next stock that they take over. The company only at 200, well, less than 300 million, so I suppose a bit too cheap to be taken over at this stage. Private equity like billions rather than millions. But what is interesting here is that we've got a target here as high as 166 pence, hopefully by the end of next month, while we remain above the previous target there at the top of the rising trend channel from December 2023 at £1.30. Moving along to a rather strange chart, which comes in the form of future metals. We've got a broadening triangle base here, top of the triangle there, heading for 1.1 pence. Looking for that by the end of this month, while we're above the 200-day moving average at 0.76. 50-day line starting to rise up, and we've had the a double and triple unfilled gaps to the upside off the low, so that is looking quite encouraging indeed. Market cap there, only 5 million, so I suppose it is still very much in the minnow category. On to GenIP, and here, or GenIP if you want to call it that. Here you can see that we've got that falling trend channel, top of the channel there at 32 pence, which is the initial target. If you're a fan of the shares and looking for greater glories, then perhaps if we can clear the 32 pence area over the next week or so, 45 pence could be the target at the top of the broadening triangle there from the end of November by the end of next month. All the while, we'd like to see this market stay above, or the stock stay above, the 50-day line at 26 pence. On to a requested stock, which doesn't normally get much coverage, apart from my charting ramblings. Here we had put Gooch Housego into a broadening triangle. Top of the triangle there around £6.11, and yesterday's highs 608, so no one's perfect, but looking for 611 to be hit and the top of that triangle to be hit over the next few sessions, especially given the way that we are in the run-up to a golden cross, probably 3 or 4 days away from that, and the run-up to a golden cross tends to be the strongest part in the cycle. You can see that above 611 we've got the main resistance there towards £6.70. Maybe that could be on track for the end of next month, while we're above the recent support there for the shares around the £5.58 handle. Moving along to Hydrogen Utopia, where you would have thought the announcement today from the company regarding Off-Grid would get the shares going, but instead we got the shares bouncing at the 200-day line, which was a scenario which was envisaged, and that's around the 2 3/4 pence level, at least while we're above that. Looking for a fresh break of 3.5 pence, which is the top of the triangle there from December. Best case by the end of this month, once the penny drops, is 5 pence, which is an October resistance line projection with the key here, staying above that 200-day line. Moving on to a stock which has had one of the best runs for any stock for a long time, which is Smarter Web. Here we've been looking for continuous upside within that rising black trend channel there from last month. The top of the channel there now at nearly £1.25. That's what we're looking for while we're above recent resistance at 90 pence. Previously, the support area at 80 pence worked, and also we've seen that the rebound that we've had has come from above the floor of the channel, which is a very strong signal. So this looks like a situation with those hammer candles interspersed in the price action, which is still very strong indeed. Moving along to sovereign metals, where apparently there's been more evidence of how good Garcia is. What's also helpful here is that we bounced at and above the 30 pence level and gapped up in the last week, pushing through the 50-day line at 33 pence above that, looking for the top of the range again. Hopefully by the end of next month in the low to mid 40s. On to Tau Alpha, and here we're breaking a line of resistance there from January, and that level around the 0.62 area. You can see that we've also got the 50 and 200-day lines rising, so they're rising towards a golden cross, which means we're looking for 1.6 pence perhaps as soon as the end of next month. Really could snap to the upside quite nicely given the step progression that we've had over the recent past. Ideally, we stay above recent resistance, 0.62 on Tau Alpha. Moving along to Tiger Royalties, where it would seem that the stock market's great and the good are on the case and tweeting away merrily at the moment. What's helpful from a charting perspective is that we bounced off the rising 50-day line at 0.1. Still looking for the top of that triangle there as high as 0.2 pence now by the end of next month, or hopefully a bit sooner. On to UOG, where again, a bit like other stocks that we've been looking at today, everyone and their mother claiming credit for them. But in the case of UOG, we were insistent that the shares were heading towards 0.2 pence, and they've done that. They actually did that yesterday. End of day close above 0.2, looking for 0.3 pence by the end of next month. That's valid while we're above recent May resistance, 0.16. Finishing off with another winner here, which has been Zenith Energy, and here, been on this from the start, just because it's been a great charting situation back in December. You can see we've got a U-shaped bull flag, as I call it, looking for a break of 16.5 pence to take us up to 22 pence, perhaps as soon as the end of this month. Remember, obviously there's the big arbitration wins waiting in the wings for that company. Upside valid, certainly while we're on the right side of 14 pence. That's it for me today. More updates tomorrow.